Hello and welcome to this Wednesday edition of FreightWaves Now. I'm your host Anthony Smith, and coming up, Luke Falasca is going to give us a broker update. We also have Andrew Cox back with us with a ship update, but first we're going to go to Zach Strickland with a carrier update brought to you by PowerFleet. Stay tuned.
Welcome to this carrier update presented by PowerFleet. I'm your Zach Strickland, and today we're watching tender volumes start to drop again. So we thought we were going to get a little bit of an even shot here on the outbound tender volume index, as it did show some signs of leveling off here over the little weekend. So you see, we've got a little bit of a bounce out of Good Friday, and it comes up, and now it's going back down again just slightly. We've fallen another 1.1% after only dropping about 0.3% yesterday. The tender volume index is really confused at this point in time, I think, along with the rest of the market. So looking at our outbound tender volume index weekly change, this is what I really look at to show exactly what the tender volumes are doing, the rate of change in the tender volume index. So it's going to tell me exactly when things are getting really heated, a lot of volumes increasing rapidly as this chart goes up, and then it's going to drop really rapidly when volumes are dropping down. So a negative 2.65% week over week change is what we're looking at right now. I've got this baseline chart on it that shows anything in green is a positive change, anything in red is a negative change. So going all the way back here, you can see this is holiday back here around New Year's and Christmas and Thanksgiving. A lot of volatility there in volumes as they do drop off significantly around those times. And then, of course, the coronavirus, COVID-19 pandemic has had a couple of waves in it. So looking at the overall market, long haul, I should say, van outbound tender volumes and reefer tender volumes showing slight horizontal movement here. Both of them are down, of course, roughly 1% or so day over day. They're not changing dramatically anymore. They still are showing signs of leveling out, but they still continue to decline. So both segments, as we were thinking that reefer had a little bit more stability, now they've fallen back in line with the van rate of change itself. The one thing that I want to point out here in all of this, other than the fact that you don't see near as much green on the outbound tender volume volatility here, or red, things are starting to stabilize a little bit more there as things don't change as much, is the long haul tender volume index for the United States. So it is the only length of haul on this whole thing that is showing an increase. So we've got a slight change on the OTVI, so a 0.5% day over day change on the outbound tender volume index for long haul freight. That is moves over 800 miles. So what to take away from this is the fact that we are starting to shift away from that short haul volume freight that had dominated a lot of the COVID-19 outbreak, as a lot of that freight was moving intra-market, going from DC to retail storefront, as people were purchasing a lot of consumer products, a lot of consumer goods and local things. So long haul freight is going to be that replenishment volume. So now what we're starting to see a shift to is a lot more freight coming across the country. Again, we saw some of that in Ontario, Los Angeles yesterday. We talked about that market a little bit as volumes are starting to pick up out of there. So that's a sign that we are going to see a little bit of this replenishment volume coming across the country that we hadn't seen previously. So what does that mean for capacity? Well, nothing. So capacity itself still continues to drop. You can see that we've made a hard left turn, though, on the outbound tender rejection index, as things are continuing to drop, but not necessarily as fast as they did before. But again, the closer we get to zero, the slower that rate has to get in general, because carriers are just simply not going to be able to reject more than all the freight, accept more than all of the freight that they are tendered. So 3.32%, another all-time low on the outbound tender rejection index. And the rest of the country, I have this up here, our volatility map sorted by the largest volatility on the outbound tender rejection increases. So Las Vegas today actually showing a pretty big increase on outbound tender rejection rates. So anybody operating out of there needs to be aware of that you might have a little bit more spot market activity. You might be able to keep your margins a little bit higher there if you are not operating on some contracted freight trying to get out. Van and reefer rejection rates, again, just like the tender volumes, going a little bit horizontal here. Not a lot has changed. All length of haul showing, declines in tender rejection rates. So not a lot of change there. Volatility starting to flatten out as we approach the end of April. And that'll do it for today's carrier update.
The comprehensive logistics offerings from PowerFleet cover in-cab ELD, fleet management, trailer tracking, cargo monitoring, and tracking other assets such as chassis and intermodal containers. Power up your operations with PowerFleet.
Hi, good morning, everybody. I'm Luke Falasca, bringing you another broker update. So we've seen freight volumes level out a little bit over the last few days, which is a good sign, but it does look like there might be dipping a little bit again. So we'll see if that continues. The blue line here is those volume levels. We know that we continued the bleeding all the way down until about the 16th, when things kind of had a very slight uptick, which you probably didn't feel at all because it was very slight. And then we kind of leveled off, and we might be starting to decline again. We'll see how significant that will be. But as of right now, freight volumes are not showing really any significant or any real signs of recovering at this point. So expect potential further slipping. Now, the green line here is the rejection levels. Those are continuing to fall. We haven't seen any uptick on those. Those are down to 3.32%, which is the lowest level that we've seen year to date. So do keep an eye on that. That's going to continue to lower spot market rates. You're going to have to be very aggressive when you talk to your carriers and push their rates down in order to create margins. As far as like some areas to look on, let's go ahead and check out the volume map here. So remember what we're looking at. This is the weekly volume change, or the 7-day change up to today. So markets in blue are where volume levels are increasing, and the markets in red and white are where volumes are decreasing. Red would be where volumes are decreasing the most. So since rejections are continuing to go lower and your margins are going to get pressed, you're going to have to find volume and make up for it with quantity of loads. So for the most part, volume levels are not changing that much over here on the West Coast, although Ontario did see a little over an 8% increase, so that's pretty good considering the size of that market. Otherwise, a little bit up here in the mountain regions of Montana and some of these other areas of Wyoming. Not a lot of freight up there. If you happen to have a customer up there, great. You might get a few more loads, but otherwise, nothing significant is happening there. However, right here, kind of around Indiana, Chicago, Minneapolis, some of these surrounding areas are seeing a little bit of increases in volume levels. Also, the southern parts of Tennessee and Arkansas are also seeing some increases. So if you're looking for some areas to call, I'd focus on areas surrounding Chicago, as well as areas surrounding St. Cloud, Minnesota. You might have some good opportunities there for volumes. Also, a little bit around the DC area, seeing some increases in volume as well. Now, Allentown, Pennsylvania, just go ahead and look there. Typically a pretty good market size, but right now what we're seeing is volume levels are in blue. Looks like they had fallen to about March levels, or the beginning of March, so right before this surge happened, and they were leveling off and actually showing some signs of increasing, but they're actually beginning to slip now. So they're falling again. That could put more downward pressure on rates as capacity loosens up. The green line is that rejection level. So far, those are remaining level right now over the past few days. But as of right now, they're sitting at about 6.18%, so roughly double that of the national average. So you might have a little bit better opportunity out of Allentown, Pennsylvania, for getting some higher rates. But as a whole, volume levels are slipping, so I wouldn't look there for quantity of loads if that's what your game is right now. Ontario, California, on the other hand, is seeing an uptick in volume. This blue line here is the volume levels. This is where we were pre-March levels. We're right about down there, and that's right where we're back. We fell below pre-March volumes here. You see this blue line. We dipped all the way down to a low on the 14th, but we're actually beginning to rise back up again, and we're seeing that uptick for the first time over the last couple of days, and it's significant enough to push us above where we were pre-March. The orange line is tender rejections. Tender rejections are very low, so make sure you suppress rates to your carriers in order to create margins. So far, those have not moved at all with that volume. So as you're getting loads out of Ontario, keep your rates low, or if you're finding a shipper out of Ontario, you're going to want to try to keep your rates low as well to win freight, because carriers are going to take it for less. I'm Luke, and then I'll do it for today's broker update.
Voices from every corner of the supply chain concerning all modes of transportation. From the world's largest logistics podcast network, this is what the freight tech revolution sounds like. Freightcast presented by FreightWaves. Subscribe now wherever you get your podcasts.
Welcome to your Shipper Update. I'm here with Andrew Cox. Andrew, what do you have for us today?
Anthony, today we're talking about blank sailings to the U.S., specifically the U.S. West Coast from China. We're looking at data from the first week of April for the first week of May through the last Sunday. We had 435 blank sailings to the U.S. and Europe. That was a total of 7 million TEUs taken offline that have not been shipped. And the thing is that this is not going to stop. We have more blank sailings through the end of May and even more through the end of June. And these range from 13 to 28%, but if you take them in aggregate, it's about 20% of the capacity or the volumes that would be coming to the U.S. if there wasn't a international crisis going on that are not coming. So yes, this has impacts through warehousing, through intermodal, all the way down to freight. That it's gonna, we have a drag on volumes that's probably going to last here for the next couple of weeks.
Right, and one of the things that we spoke about over the last couple of weeks is that volume and production is starting to come back online in China. So this kind of shows that it's not just a supply side thing, it's a demand side thing as well.
Right. I mean, it's got both sides have got to come up at the same time. We have production in China that's come back online. They're near full capacity, but we have the demand from the U.S. and from Europe. I mean, most people are still under lockdown. We've seen Germany and the U.S. and other countries start to roll out what a reopening would look like, but we're just not there yet. The demand isn't back. We still have a fifth of U.S. American workforce still unemployed. So the demand is going to be, it's going to take some time to recover. And there's two further risks, I think, that is going to hurt import volumes past just the blank cancelizations, is reduced utilization. So the ships that are coming, they're not even filling up as to their full capacity. So beyond the 20% that's reduced by the blank sailings, we have even more because the ships that are coming aren't full. And then we have the different ocean alliances are taking different approaches to how they're going to cancel sailings. Two of the three big ocean alliances have blank sailings through the end of June into the first week of July, but the one ocean alliance has only gone through the first week of May. So I'm expecting even more blank sailings to happen in the next couple of weeks, which is going to even drag on import volumes and eventually down to freight volumes for some time into the summer.
Right. So we're looking at the other segments. We're looking at freight volumes, looking at capacity. This is going to be a huge factor into all of that.
Yeah, of course. I mean, a lot of what Americans consume is imported, and a lot of what our American companies produce come from imported parts. So, of course, if we have less imports coming in, it's going to be a drag on the American production and American consumption.
Excellent. And you mentioned this has impacts on different parts of the supply chain. What are some of your expectations for warehousing?
Well, I've spoken to Henry Byers last week that warehousing is kind of it's a mess out on the West Coast right now because we've actually had a pretty normal import volumes up to this point, besides a couple week drag due to the coronavirus and their production being shut down. But we're seeing a lot of volumes in right now, but we're not seeing those volumes leave on the outbound intermodal or on the rail. So which is telling us that there's a lot of importers over there that are looking for short-term capacity to try to get that stuff off the ports and into a warehouse. So right now we're having like a tight capacity in warehousing, but we may see some of that loosen up over the next couple of weeks because we have less volume coming in. Right,
and one of the things that you mentioned a little bit earlier was we still have a large amount of Americans unemployed. We have the unemployment numbers coming out tomorrow. Any expectations for that?
Yeah, I mean, I don't think we're going to hit the 6 million mark again, but I do think we'll be in that 3 to 5 million range. I don't think, I think people are still getting laid off. So yeah, I think it's going to be another horrifying number, really.
Got you. Andrew, and where can we find more of your insights?
Yeah, you can find everything at freightwaves.com/passport. That is where all of our research is. We're going to have another report coming out this Friday, and then we'll have stuff coming out every day, just about.
Excellent. Looking forward to it. Andrew, thank you so much.
Yep.
And thank you so much for tuning in. That's going to do it for this edition of FreightWaves Now. The content doesn't stop here. We're always streaming around the clock. So check out our FreightWaves TV app on all your favorite streaming platforms, including Apple TV. Thank you so much for tuning in, and we'll see you on the next episode.